Saturday, January 20th, 2018. Monaco 64, home of alternative economics and contrarian views. As you can see, I'm not in London this week. I came over to Switzerland on Wednesday. We're leaving back on Monday. Not as easy to do all the videos as I'm not at home and in my office, but I have followed the markets as you've seen through my videos. For me, the most important event this week has been the rise in the 10-year Treasury yield. We closed at 2.66% yesterday, and that's a 52-week high. And the yield has moved from 2.40 at the end of 2017 to where we're now, 26 basis points in about 3 weeks. The next key level on the upside will be 3%, which would be a 5-year high if we break through 3%. Am I saying we're going to go to that level next week? No, but I consider the close above 263 a breakout for yields. And what does that mean? As I have said in the past, the bull market in bond prices since 1981 is what has driven the credit bubble of the last 37 years. It's what has driven debt growth, and now we're starting to see that turn, in my opinion. It's a slow process. Of course, the bull market in bond prices means that we've had yields going down those 36 years, or interest rates, because bond prices and interest rates are inversely related. But now it's turning. We have, it could be a false breakout. We could see next week yields go back down, but technically they look very bullish or bearish for prices. Sorry about the noise. The Swiss, it's not even 9 o'clock. They're already plowing the snow. It's been snowing almost every day here, so they have to keep plowing the snow for the car park behind. You can see as well there's a mountain behind, a ski mountain, so people need to park there when they come to ski. So they need to clear everything. They start early. You can hear them doing it at 6 o'clock in the morning. So unlike in the UK, when it snows, everything stops. In Switzerland, I guess they're used to it. But anyway, back to the markets. What about precious metals? Precious metals had a choppy week. Saw yesterday, towards the end of the day, we were trading around 13.35 in gold, and then the the usual suspects smacked gold down to around 13.31 on the in the after market, COMEX market. That's normal. Silver still stuck up around 17. I also saw this morning, reading the headlines, that there is going to be a government shutdown in the U.S. The Senate vote didn't pass. Democrats voted against it. As I said, I think those things are distraction. We need to keep an eye on the price of money or interest rates, and that's the most important thing, in my opinion. Cryptocurrencies had a wild week. Bitcoin got down to almost 9,000. I see that right now we're at 12,500. It looks like we held a 100-day moving average. I don't think we're out of the woods yet for Bitcoin. We're still consolidating. We could go back up to around 15,000, but that looks like a big resistance to me, and it's not out of the realms of possibility that we could even see it go back down to around 7, or maybe even a little lower. But right now it looks like we're rebounding in cryptocurrencies. Currencies, old world currencies or fiat currencies, the dollar had a very bad week. Broke that all-important level at 91 in the dollar index. Been frustrating for holders of other currencies and gold. because gold, when gold goes up, all the other currencies are going up as well against the dollar, so that neutralizes the gold move. But I think people need to be patient, because all other currencies, fiat currencies, are based on the US dollar. They're derivatives of the US dollar. Back in 1944 at the Bretton Woods Agreement, everything else was fixed to the dollar, and the dollar was fixed for gold. So that means that all the fiat currencies, when the dollar goes down eventually and is worth less against real things, so will the other currencies. They're just taking turns at the moment. What else is going on? Not much. If I think of more things to do, I'll do another video. And it's getting a little cold out here now, and I'll go back in. I hope you enjoyed this video. If you did, please join, share it. Subscribe to my YouTube channel if you haven't yet. And you can also follow me on steemic.com and on Twitter, and I'll talk to you later. Bye.